Thanks, Chris. Well, welcome everybody. We've got some other folks that will probably be Zooming in, but I just want to say thank you for being here and thank you to Steve Temple with Pinnacle Investment Advisors for kicking off our first business boost of the year. So we're excited. Thank you guys so much for being here. It's something new that we're trying to do this year since people still like Zooms. I am not one of them. I'd rather be in person, but then I wouldn't get
Yep.
to see people like Justin, who I haven't seen forever, but he's here. So we're excited to do this. We'll be doing it every month with different topics and all. We're always looking for other hosts, but hey, let's get started. I'm going to turn it over to Steve here in a minute. As we go, guys, if you have any questions, if you can put that over in the chat bar, we will monitor those. And then when Steve is done with his presentation, we can go through any types of questions. And same goes if we get this streaming on Facebook Live, you can put anything in comments there. Likewise, for any type of questions. So with that in mind, thanks again for being here. And I'm going to turn things over to Steve Temple.
Yay, Miss Wendy. Okay. I tell you, Wendy, when you said something a moment ago, let's look back on 2020, when we had the COVID crisis. We were all forced to change our business models. Wendy, when you said I much prefer to meet people in person, that's been my mantra from day one. I've been doing public speaking for, 20 of my 30-year career. And I prefer to meet people in person, but COVID changed all that. And it put me in a place where I was not comfortable with all this social media and Zoom calls and go-to meetings and trying to conduct meetings online. But we had to force ourselves to learn new technology. But even with that, we still stress with it. I do personally, I still prefer to meet people in person. But I know when Wendy and we were talking about this opportunity, one of the things that I shared was one of the hot topics right now that's really going on, both professionally and also as a country, was this Social Security issue that's been happening. The new legislation that started earlier this year. And first, I want to just my disclaimer is going to be, number one, I'm not an economist, because we're going to get into a little bit of market update today and talk a little bit about tariffs. I'm not an economist. I'm not a financial analyst. And yeah, we're going to be talking about Social Security, but I do not work for Social Security or any government entity. And that's probably a good thing, because I can tell you the truth. So, but I do work with my team a lot. I'll introduce them in just a moment. But one of the really significant things that's happened, we call this legislative risk. And one of the things I joke a lot about, one of the few things written in pencil is our legislation, meaning that it can be erased and it can be subject to change in any moment. And even we go back to one of the topics we're going to talk about today is Social Security. A little bit of background on that. Social Security began in 1935 under the Franklin Delano Roosevelt administration. This was actually approved in 1934 to provide a retirement income for our senior citizens. But the thing that's kind of interesting about that, 1935 was the inception of Social Security, and some of the promises they made to us then, that Social Security would be a benefit that if you pay into it, from your payroll deductions, then we will provide a retirement benefit for you at retirement, and it'll never be taxed, and et cetera, et cetera. Well, obviously, again, legislative risk changed the rules on Social Security, and later, as we learned, they changed it actually twice as far as how much of it will be taxed. But the thing that's kind of interesting, a little trivia here, you look back on Social Security, if you were born in 1934, and this is for any of the audience want to participate, 1934 was your birth date. What was the average life expectancy if you were born in 1934? How long were you projected to live? Somebody just take a guess.
60 to 65.
58 years. Okay, 58. Good. From Chris. All right. Anybody else?
I said 60 to 65.
60 to 65. All right. Well, those are good. When I do these in public speaking, I hear all kinds of answers. So 58 and 60, 65. Well, here's the interesting thing, and it goes back to the 58, 60, 65. It's actually 59.7 years old, okay? Was your life expectancy if you were born in 1934. Now, back in the day when Social Security began, the benefit would be paid out at what age? Age 65. Now think about this for a minute. The projection is that you're going to live to 59.7, but you don't get a benefit until you're 65. Does anybody see any irony in that? See, here's the thing, folks. They did not know that modern medical technology was going to advance, and that would then extend our life expectancy. I'm not going to say Social Security was a Ponzi scheme, but if it was something created on the hope that they never have to pay it back, well, it is what it is. But so over the years, yeah, we put into it and we started receiving benefits. And again, I think some of the rule changes had to take place because we all know that Social Security was kind of a slush fund that they could reach in and extract funds on will. And they had to change the rules because they realized people were living longer. Hence, that's why we had some of the taxation changes. And then recently, we've had the increased age of which you could receive your benefits. So just a little trivia there. But some things we're going to talk about today. In fact, here's the rule: 1970. The administration, once again, they actually barred public workers from receiving benefits if they were receiving a pension. And we're going to talk more about that in just a minute. 1977 was when they enacted the government pension offset, the GPO, we'll call it. We're going to talk about that. And then 1983 was the windfall elimination provision. So one of the things that happened back in January of this year, legislation did overturn those two benefits and made it more beneficial. And what does that really mean? Well, let's talk about the WEP, the windfall elimination provision, for an example. Let's say, then I'll just use, I'll just use Kathleen. Kathleen is a government employee, possibly even a teacher, and she worked in that sector for about 10 years. And then she decided she wanted to do something different as far as career. And then Kathleen went into work for the private sector and remained doing that for the remainder of her working years. And then one day when she retired, because she had this government pension that was being provided by her, being a government employee, a teacher, whatever, she was not going to get all of her Social Security benefit. There was going to be a calculation to be utilized where she would be penalized. So the interesting about that, and that's why I'm really proud of what legislation has done. And many of our senators and our elected leaders have been working on this for about 6 to 8 years, and they finally got it approved back in January. This is now a substantial benefit for those that did work in the private sector, that also worked in the government sector. It could be teachers, government employees, police officers, firemen, whatever. They now are not being penalized. And I know in this case, Kathleen is going to get a substantial increase in her income because of the new rules. And so obviously it doesn't take effect until April of this year. They are going to go back till January of last year and do any roll-up benefits that would have been paid out. Now, the bad news is, because Social Security office is already overwhelmed, because we are seeing record number of people that are retiring in this time period than we have in many years past. The office is overwhelmed right now with doing a lot of the administration and getting people their benefits calculated. Sometimes it's taking 3 to 6 months. They encourage you 3 to 6 months out, start applying for your benefits because of the time it takes in order for the benefits to be provided. So this is, the payback, if you would, the roll up could take as much as a year before one would start receiving that lump sum, if you would. But the good news is, effective April this year, folks will start seeing an increase. But the challenge is most people don't even know about this benefit yet. And that's one thing we've been very proactive the last 3 or 4 weeks. So actually 2 months that we're doing a lot of education opportunities to let people know this benefit is out there. And now we encourage people to come in and talk to an advisor and let them help you figure out what kind of benefit does that mean for you, and how do you want to maybe restructure your retirement income so you are getting the maximum benefit. And that kind of goes back to the Social Security. The things that we've worked hard on for many, many years is how to help people determine, when do you want to take your benefit? It's called filing strategy. When would you want to file for your benefit in order to receive the maximum income from Social Security? Now, there's a lot of opinions on that topic. Most people know you take it at full retirement age, you get your full benefit. If you take Social Security early, you can start taking it at 62. However, you're going to lock in a 25% guaranteed loss for the rest of your life. And even maybe that will even affect maybe a survivor benefit. But nonetheless, you calculate your benefit, but it really comes down to 2 things. Number one, how much is your check going to be and how long you receive those checks. I've had a lot of people I've met over the years. They were advised to wait and take their benefits at age 70 because that's when you receive a guaranteed 32% increase in your benefit beyond the full retirement age, if you would. However, the thing that has to be considered, though, if you wait till age 70 and because of your genes, your longevity, your health, family history, what if your life expectancy is only 76 years old? Does that mean you would want to wait till age 70 to take the benefit? And we've got a thing called Social Security maximization optimization. And here's the reality: only God knows when our time and date is up. However, we put a lot of work and effort into looking at various calculations, considering your other income sources. When is the right time to take your benefit? And we're going to help people figure that out. So going back to this windfall elimination provision, we encourage folks to reach out to an advisor and let them help you calculate, does this change when and how you should start taking your benefits from Social Security? And even more importantly, talking about survivor benefits. And that's one of the other benefits that's been rolled out to us. It's called the GPO, the Government Pension Offset. In this example, we'll use Steve. I wasn't going to use Wendy as my example, and I was going to use Chris. Just have a little bit of fun here. So Wendy or Chris or Steve and Kathleen, let's say that as a police officer, and he was a lifetime career police officer, being a public servant, and he was going to receive a nice pension for his honor and work that he did during his career. And he was married to Kathleen, and Kathleen worked in the private sector all of her during her working and accumulation years. And here's the thing: let's say that Kathy passes away prematurely. Steve, obviously, in the normal scheme of things, he would be entitled to a survivor benefit. Wife passes away, husband, wife, whatever, one could, consider what the survivor benefit would be. And that's kind of important when you start integrating your benefit versus survivor. How do you maximize that benefit? But here's the thing. The penalty is that GPO is they take 2/3 of my pension, for example, and let's say my pension is $5,200. That's what I would receive in my pension at retirement for all of my years of working as a police officer. And let's just say that Kathleen's benefits $3,200, which is a substantial amount in light of by the way, the national average for someone receiving Social Security benefits is a little over $1,900. On average, that's the average payout. But again, the high, I think it's 3,600 is the high, but 3,200 would be her benefit. Now, here's the kicker. They're going to take $5,200, which is my benefit, and they're going to take 2/3 of that amount. And that would be what we call the GPO, the pension offset. And that number is $3,484. 2/3 of my pension is $3,484. But wait a minute, survivor benefits only $3,200. That means I would receive nothing. So these are some things that have been considered in legislation. They did approve these things. It's going to mean a substantial windfall, if you would, for those folks that understand these benefits and how best can I, calculate to get the maximum out of it. So that's just one thing we wanted to touch on today. I think the goal is, and we're committed to do this for the next several months, educate people as much as we can that this benefit's out there, because let's just be honest, they're not going out of their way to publicly announce this on any media. You turn on the TV tonight, you're not going to hear about this. And I think it's just important we get the word out. And I appreciate Wendy and Chris for giving us the opportunity to share some of these facts today, because the more we talk about this and the more the word gets out, these are substantial benefits that people can qualify for. So any thoughts and comments on that?
I mean, I think like you said, Steve, I think there's a lot of people that just have no idea, like this, they don't understand the history of things. They don't understand where things are going. So I think this is really helpful to, especially even for employers to explain to their people, right?
Right. And that's what this effort is all about, is just making people aware of it. Because like I said, people are going to start receiving substantial income increases, and that could change. I mean, let's be realistic. Social Security versus your other nest eggs, it's like a seesaw. If you defer your benefits from Social Security, payments, and you're going to retire at whatever that specified date is, you're going to have to tap into your nest egg prematurely or early, if you would. And that's where the Social Security optimization report helps us determine when is the best time for this individual and or couple to take their benefits. And when you look at the complexity of that, husband and wife filing joint, there's over 20,000 possible calculations of what day, what month, what year should you start taking your Social Security benefits? So so you take Social Security early, that means you can defer your taking money out of your nest egg, allowing that to continue to grow a little bit more. So it's kind of a seesaw effect. You take one benefit early, you're going to offset the other benefits. So it always depends on your scenario. When is the right time to take benefits? I know up until now, most people always thought of age 62, age 65, which used to be full retirement age. Now it's 67. And yes, that is going to increase in years ahead. They've already said 2030, we're going to probably see another adjustment. So, but used to think 62, 65, or 70. Those were the three considerations when one might take their benefits. And that's not really the answer. The answer is it might be to you to optimize your benefits under your scenario, not your neighbors, not your coworker, your scenario. You're better off to take your benefits at age 63 or let's say 67 in 6 months or 65 in 4 months. So we help people determine when to pull the plug, when to pull the trigger on receiving those benefits. And again, nothing's ever guaranteed. Nothing is for certain as far as longevity, but we do apply more than just guessing or throwing a dart on a dartboard. We put a little bit more science into it based on your longevity, your health. And I know I had a situation I had years ago. I had an engineer that his CPA had told him to go ahead and start taking benefits early. And the calculation was correct, that by taking the benefits early, he was showing my client, because I managed his investments for him, that it would take a 12-year roll-up or catch-up period, that if he waited until 65 to start taking his benefits, it would take about 12 years for what we call the catch-up provision before it would, that's what we call the crossover. That calculation was correct, 100%. By the money he would have received for that 3 years prior to age 65, it would have taken him 12 years to pull the money to equal the same amount. But the thing I knew about this client, he had German descent, German genes, which there's longevity there. He was extremely healthy. Both he and his wife were. And his wife also was, here we go, she was a school teacher. So there is that consideration. We just talked about that on this windfall elimination provision. And even the GPO applied for both these situations. But here's the thing, knowing his history, I said to him, you're about to make a decision that you're betting that you're not going to live beyond average life expectancy. He said, well, Steve, that's not true. His grandparents were still living. I mean, my gosh, these people had longevity in their genes like crazy. But I said to him, I said, well, you're making a decision that you're not going to live beyond average life expectancy. He said, well, we probably will live to 100. And that's very realistic in this situation. So I showed him, I said, well, how about before you make your decision of when to file for your benefits, why don't you allow us, my team, to run this maximization optimization scenario, which we did. And when it came back to his numbers, the seesaw effect, once again, it was over a $400,000 decision he was about to make, not in his favor, because knowing that his wife was it goes back to that pension offset, that she would have never received a survivor benefit had they made their initial selection. But knowing that they utilize this optimization scenario, and realistically, women outlive men 6 to 8 years on average. Again, not always 100% solid, but women usually outlive men 6 to 8 years. So when we consider that in that scenario, and her receiving a survivor benefit, assuming he predeceased her, it was over $400,000 difference of total payments that would be made during both their lifetimes. So these are things that we want to carefully consider in each scenario. So anybody listening today, I know we got a few people on here, I encourage you, and anybody that should hear the recording after the fact, I encourage you to take us up on this offer. We will run the Social Security maximization optimization report 100% complimentary. And Chris and Wendy, I'll do this because of my relationship with you all here in the Beavercreek market. But anybody that hears this, sees this, we will run that report at no cost to them, no obligation. So you can see for yourself what is the right time to start taking your benefits.
That's awesome, Steve. Thanks for doing that, because you're right. I mean, it's people don't know they're going to lose money, right?
Right.
400 grand is not a small pill to swallow.
I tell you, when that happened, he put his hands up on his face like this, and just, but because he was so appreciative our team taking the time to have that conversation with him, because otherwise what he was being told was 100% correct. The calculation and the math was 100%. You couldn't contest it at all. But the thing that wasn't being considered was his lifestyle scenario in terms of his life expectancy. So anybody that hears this, I encourage you, let us run that report for you and get a better idea of when is the right time to start taking your benefits. And then going back to the new legislation that just occurred this year, and very, very appreciative of our senators for working so hard the last several years to get this thing approved. Now, it didn't affect all states. In fact, I had the list here. Ohio is one of the states that is benefiting from this. Let me see. Here we go. Every state that has public employees do not participate in what we call Social Security. But the employees that live in Alaska, Colorado, Louisiana, Maine, Massachusetts, Nevada, and yes, here we are, Ohio. Folks, this benefit, legislative change is going to make a huge difference in your Social Security benefits without the GPO being a problem or the windfall elimination provision. So again, we encourage you to take advantage of this. Let us or somebody that you know go to any other advisor, if you would, and let them help you run these scenarios and see what benefit this means to you. And more importantly, is that going to change when and if you should start taking your benefits?
Hey, Steve, how do people set up an appointment with you just while we're on that topic?
Well, they can go to pinnacleinvestmentadvisors.com, go to the website. Right on that homepage, Chris, and thanks for sharing that. There is a link on the homepage when you scroll down that you can click on our calendar link, and then you can schedule a 15-minute call. You can also schedule a live meeting and or virtual meeting, and you pick a date on the calendar and a time. If we have any conflicts, we'll get back to you. But again, we encourage you to do that, pinnacleinvestmentadvisors.com. And then, or better yet, just pick up the phone and call us, 937-667-6500. And one other thing I want to mention too, Chris, I forgot to share this. Every Sunday we do a radio show. In fact, we first talked about this, I think 2 weeks ago, maybe 3 weeks ago on WHIO. We do a live show on Sunday mornings on WHIO, Temple Talk Radio. And each Sunday we tune in with a different topic. And what we're being told by many of the listeners, we've been on the radio for about 2 years. It took about a year to get some momentum going, but I got to share with you, each week now we get calls and or emails. People are listening to the show. So again, templetalkradio.com, that's the website you can go to. So if you missed the Sunday show, you can go to templetalkradio.com. And then I think the most recent 6 or 8 shows are archived. And this is kind of important too, because a lot of our shows we do in 2-part series. Part 1 may be on this Sunday, part 2 will be next Sunday. And sometimes people do miss one of the segments. So again, we want to encourage them to go back to templetalkradio.com. That way you can see the most recent 6 or 8 segments. And then beyond that, if you Spotify, here we go. I'm getting my tongue twisted for all this technology stuff, but you have Spotify, you have Google, Amazon, anybody that's listening to podcasts, you can subscribe to Temple Talk Radio. And then each week that show automatically will give you a reminder that we have the most recent shows. So just another good way of us trying to get information out here. And I did receive a lot of compliments. We had an aerospace engineer at the base. He listens to our show every Sunday morning on his way to church. And the thing I asked him about that, well, first, how'd you hear about us? It was the show. And he shared with me, Steve, the reason I like your show, you're not pitching any products. You're not trying to sell us anything. You and Tony are actually having a lot of fun. And yet we are going to, this year, we're actually going to have some guest speakers. And Wendy and Chris, I know you all are going to be on our list this year to be guests on our shows coming up in 2025. But that's the thing you shared with us, is that we're not soliciting, we're not trying to sell anything, and we keep it fun and informative. So we've had a lot of compliments like that. Another lady, this is one of my other favorite stories. Just last week, 2 weeks ago, she's 84 years old. She listens to us as she's driving into her workout. She works out every Sunday morning at 7:30. So she doesn't get to listen to the entire show because her workout starts at 7:30 and our show starts at 7. But the thing, she started talking about her lifestyle. This woman is playing pickleball. She is working out. She swims. She's 84 years old. And she's coming in next week to meet with us. So that's going to be kind of an inspiring moment to see, this woman and how she heard about us on the radio. And it's just kind of fun to hear this feedback. So not to put any personal plugs in there, but again, this is just a way for us to get the word out to the audience that we're here to help folks, and or take this information and go to your advisor, let them help you maybe sort some of these things out. I know one of the shows, and I'll just touch on this, that we did, one of our highly ranked shows was how to go about hiring the right financial advisor. We give 7 tips. This show we did over a 2-part series. And that's been one of my most well-liked shows, because we're giving the consumers 7 things you need to look for and ask for from any associate or advisor you're considering working with. That way you have a better idea, maybe, are they working in your best interest? And so we do encourage consumers to find a fiduciary, someone that has passed their 65 law exam, because they're legally bound to work in your best interest. And that's kind of an important thing these days. So again, find someone that's maybe a fiduciary that has this resource. Take the information we share, go to them, let them help you figure it out and how that's going to benefit you. So thanks for allowing me to share that, Chris.
Oh, no, that's awesome. I mean, it's a great resource to have, and especially since you have your past episodes on that templetalkradio.com. It's
right.
It's to your point. I mean, and then I know you're addressing a lot of current topics, right? As things come up, you bring
Yes.
them into your show. So, like we've even shared today, there's so many things that people just can't keep up with, and that you're staying on top of to share. So we do encourage people to check that out and to give you a call to help get that help if they need it.
I'm going to change gears here, and if let me see if I can, Wendy, if I can screw this up.
Never.
Oh my gosh, this is okay. Share screen. Let's see if we do this right. Okay, is everybody seeing that?
Yeah.
Okay. From the beginning, here we go. Okay. I talked about my team a little bit. Here you're seeing a few of them. Listen, when I started 30 years ago, yes, I did enjoy sitting down, doing the analysis and using Morningstar and trying to figure out investment strategies. Well, I decided that was not as much fun as I thought it was going to be. So I've gone out and I've partnered with other professionals across the country. And one of the teams I'm most proud of is my team at Gradient, which is an investment advisory firm. These folks here, you see Mike Binger, Jeremy, Keith, Tyler. These are about 150 years of experience, of investment experience among just those 4 individuals. They are what we call CFAs, Chartered Financial Analysts. And one of the things there, this is like the who's who of folks that work in the investment space. It takes about 3 to 4 years to pass this exam. It has about a 25% pass rate, but once you've achieved that designation, you are really one of the best when it comes to managing a portfolio. So behind the scenes, people I work with, just a lot of wealth of knowledge, wealth of experience. And then the rest of these people are kind of their support people. Matt Anderson down in the bottom left-hand corner, that's my investment consultant. Matt has become like a brother. I've worked with him for over 10 years now. And I work with him pretty much daily. We're working on a new case, maybe working on getting ready for a review with an existing client. I'll reach out to Matt, and maybe we talk about tweaking the portfolios. Matt became really popular back even post-COVID. A lot of uncertainty, what happened in that market, kind of a knee-jerk reaction that happened in February or March of that year. In fact, I was visiting my team back in February. I was up in Minnesota, and I was even talking to one of the portfolio advisors. What's this bat flu thing? What's going on here? We're starting to hear little whispers about it. And is that going to be any effect on what happens on the markets? They weren't that concerned about it. I mean, it's a virus. It's a lot of uncertainty, unknowns. Little did we know that was going to be politicized to what it did in March, just a month later. And boy, the market the bottom fell out overnight. And I had another advisor friend of mine that was telling his people that he was going to move them out of the investments and put them into cash. And this was the beginning of the end. And of course, I reached out to Matt and I said, Matt, what's going on here? I mean, globally, domestically, here in the US, what impact is this going to have? And so Matt and I started doing bi-weekly, or twice a week, I should say, twice a week webinars, boosting it on social media. This is when, again, we force ourselves into the technology space. We had a lot of participation. A lot of clients were on these calls. We had a lot of prospects on these calls, because this other advisor, I don't believe in market timing, folks. I believe the discipline is going to outperform, trying to time the market. So Matt was very proactive in getting some of these same people, Binger and Jeremy, even Tyler on these calls. And now you're getting reliable information from reliable sources, not some agenda being misleading. They were actually telling the truth, what was going on globally with this, what we now know as COVID, the coronavirus. And we actually help people understand and not take a knee-jerk reaction to what was happening in the market. The irony was this: that one individual that moved all of his money of his clients into cash thought he was going to be the hero here. Well, guess what happened? 3 weeks later, the market was back up right where it was. A lot of unhappy clients here because he sold them at a loss, what, 35% loss, and the market was back up 3 weeks later. So by us being proactive, and thanks, Matt, I appreciate him for taking the time to make these calls, and Keith and Michael, because there was a lot of commitment on their part to be there on these calls and answer any Q&A that may come through these webinars, because we helped a lot of people avoid making bad decisions at the wrong time and got them through that safely. And obviously the reward is that they've done well ever since. So even with Tyler, I have a gentleman. This guy is one of my best friends. I've known him for a long time. Probably one of the best precious metal investors I've ever met personally, buying gold. And he also does, some of now the Bitcoin, which I don't understand much about that stuff anyway, but he had some questions about gold and silver. And I said, listen, I said, that's out of my pay grade, but I know someone let's get him on the phone. Let's talk to Tyler and let him see if he can share some insight on some of your questions. When we got off the call 30 minutes later, this gentleman says, Steve, I'm very good at what I do, but I just got schooled by this young man. He said, there's things he just taught me that I wasn't even aware of, because on a global scale, Tyler was able to share some insight that this gentleman wasn't aware of. So he's now a client today because he wanted access to these resources going forward and helping him make, really good financial decisions. So that's one member of my team. Here's part of the other team I talk about. Very fortunate that when I meet with people, we gather a lot of information, and I go to these other members of my team, and whether we're working on say it could be an estate plan, we might be working with a business owner, because every one of those needs are going to be somewhat different. If we're doing a general retirement plan, Leo is one of the folks I work with most common, but this isn't the team. These are all certified financial planners behind the scene that are helping us do the case analysis and put together recommendations that we feel are going to be in the client's best interest. So again, a little bit of just a lot of wealth and knowledge among some of the people I work with day in, day out. We're going to change gears a little bit, because one of the other things that's really become a hot topic here lately, and we even did, let me get some notes here. We did a radio show on this, I think 2-3 weeks ago. In fact, if you want to go to Temple Talk Radio, you'll see, you can link and actually hear the show. But we talked about tariffs. And I told Wendy, even today's show, we want to maybe talk about what we call market corrections, market analysis, market overview. But right now we're seeing a lot what's going on in the markets with these tariffs. And, yeah, here's the thing, and there's all kinds of viewpoints and different opinions on this, but I watched an interview with Mike Rowe, and everybody knows Mike Rowe from Dirty Jobs. In fact, Mike is launching a new series, something about America. I forgot the title, but when it comes out, I'm anxious to watch it. But Mike Rowe, Dirty Jobs, just a great guy, was interviewed about the upcoming tariffs that are taking place. And I like what Mike said. You can probably Google it on YouTube or find his interview. He said, you know what? Yeah, this is going to cause a lot of short-term volatility. And we're seeing that right now. Market's been going up 500 points one day and down 600 the next. Yes, we're seeing this uncertainty right now. And there's speculation that could lead into maybe some soft inflation, because and prices are going to go up when you start talking about tariffs. And yeah, the Fed's working very closely, monitoring interest rates on what they can do to maybe soften the blow, if you would, on some of these price increases. But Mike Rose said it best. He said, I am willing to take some short-term volatility, knowing that in the long term, America is going to be better and America is going to be stronger as a result. Because when it comes down to it, folks, a lot of things that happen globally are based on our financial strength. And I know, again, not to be political here, but I'm very proud to see what our administration is doing. Because even in one of the notes here, here it is, April 2nd. is what they've deemed as Liberation Day in America. And yeah, this is one of Trump's statements. He said, for decades, we've been ripped off and abused by every nation in the world, both friend and foe. Now it's finally time for the good old USA to get some of that money and respect back. And he said, God bless America. So going back to what Mike Rowe in his interview, he was kind of just also emphasizing the same statement, that this is going to be better for America and better for our citizens. Yes, we are going to see some volatility, even gradient. And again, I want to encourage you folks that are listening and those that do hear the recording afterwards. If you want to get the market updates weekly, Gradient provides a weekly update. They provide, bi-monthly updates to keep people informed about what's going on. And again, the thing I pride most about this, they report the facts, folks. That's important because other sources of media, they may not tell you the whole story. And I'm very proud of my team. They do bring the truth each week, each month when they share some of the market insight. So if you want to take advantage of that, like Chris mentioned, the website, go to our website, click on it and make sure we get your email, and we'll make sure we add you to the list to start receiving those market updates. So, but yeah, the tariffs, we're going to be seeing this the rest of the year. Gradient's position on this, they're still optimistic that the market's going to be strong this year, but they are encouraging people to prepare by having an umbrella. And what they're essentially saying is, take a look at your investments, get with your advisor team, and should we make any adjustments in light of the volatility we're seeing right now, some of the uncertainty, what we call short-term volatility. We do want to encourage you to do that. We're certainly doing that with our clients right now. In fact, I want to mention something else. April the 10th, April the 10th, 6 p.m. That's on a Thursday. Again, a little bit of plug here, because this is going to be a very powerful session that we will post on. In fact, I know Monica is going to start posting this this week and making the announcement. April 10th, 6 p.m. That's Eastern time. We're going to have some of the members from Gradient on a live webinar that, again, we can have some Q&A. He's going to be talking more about these tariffs and where Gradient's position is on with the Fed and inflation, price increases. It's going to be a very, very good event with a lot of wealth and knowledge and wisdom being shared. And again, you'll be hearing more about that. If you're on Facebook, LinkedIn, you'll be seeing those posts as well. We encourage you to sign up for that, because only people that sign up early will get the invite to participate in that call, kind of like today. So with that said, let's jump into these comments here. Again, I'm just going to read some of these notes. This actually came off of one of Gradient's. This may have been the bi-monthly newsletter. It talks about market corrections to be unsettling, especially when the headlines, here we go, when the headlines amplify these fears of a deeper downturn. And we're even now hearing that some are even predicting we're going to have a market crash. So, and the thing, it goes back to what you're seeing here, this market cycles, if you would. A little bit of history. I got some slides. There's more slides here that kind of support this story here. History shows that corrections are part of natural market cycles. And even I know you can't see it over here, but let's just take was this year 1991 here. I think that's the year. Well, I can't see it because it's blocked. Whatever year this is, that'd be, I'm trying to look at maybe you all can see it. I can't see it, but the year
that's
is
08, Steve, the downturn.
Okay, 08, the downturn 08. Here you go. Thanks, Chris. All these bars across the bottom are kind of blocking everything. But the market was down that year 49% overall. We ended with the market ending at down minus 38%. Again, once again, folks, caution you here. A lot of folks made really bad choices during this period of time here, because they were predicting this is the end. But guess what happened? The following year, look, the market was up 23%. Even with a 28% short-term loss, we ended up with a 23% gain by year. So the thing is, the market's very cyclical. It is going to have ups and downs. But the thing I've always emphasized, it's all about knowing your situation, what we call your risk score. How do you emotionally feel about the market? And the most important thing is to get you allocated in the right strategy to begin with, so that you understand things like this are going to happen. And when they do, you don't get fearful of it. You don't panic. It doesn't become a crisis because you've been informed and educated what the expectation is going to be. So here's another slide. Again, can't see the over here to the right. It's kind of chopped off, but this slide does show the bear markets and the bull markets. And the thing that's interesting, all the green areas you see, those are all the bear markets. And yes, what we're seeing here kind of, it just supports this statement. The market's usually up on 3 years on average. It's up, and it's down 1 year out of the 4. And you're kind of seeing that repeated over time. And again, I remember when I started my career 30 years ago, the area I stepped into was I was a 401k consultant advising employees the importance of putting money in your 401k and getting your company match. And I remember when one of the corrections happened, it was in 1998. There were some of these employees that were trying to predict the market and timing the market, and a lot of them did jump out. They got out of it, fear and concerns. The media was really broadcasting a lot of that. So meanwhile, as I was down in Texas, in fact, doing a conference down there with some employees, there were some guys in the back of the room that really thought they were kind of know-it-alls. And the thing that was interesting, they were sitting on the sidelines trying to figure out when to get back in, but all this emotions up and down daily kind of just made them more fearful and cautious. What is the right thing to do? And the thing that was interesting, I showed them, had they had a strategy that was based on discipline and not market timing and dollar cost averaging, this is what you missed out on this year. And they were shocked to know that had they been more disciplined, had a better strategy, they would have seen some gains that year. Well, meanwhile, they were just sitting in cash. So the thing this teaches us, don't be fearful. The market's going to go up. It's going to go down. In fact, it's really okay, because the thing that we teach people here is when the market's down, and the thing I even taught back in that day was I used Procter & Gamble, but Philip Morris as an example. When the tobacco lawsuit started, many years ago, Philip Morris stock plummeted overnight to about half what its market share was worth, and a lot of individual investors, they were belling on it. They were consumer sentiment's down. Philip Morris is losing money. What they didn't realize, what Philip Morris was they weren't going anywhere. They were still manufacturing Miller beer and Kraft macaroni and cheese, and their earnings statements were still very robust. But they also knew they were going to increase the price of cigarettes to cover a lot of the tobacco lawsuits. So most people were getting out of that scenario. That would have been the time to buy more. So when you see in the red, when you see the market going down, maybe that's the time you should, with discipline, you might want to put more money back in. And I even use an example, even this local market. If Walmart ran a sale today, half off, everything in the store is half off, one day only, you would not, as a consumer, think there's something wrong with that 80-inch big screen and you're not going to go buy it. No, you're going to be at Walmart. You'll take a day off work to go get in line to go buy that TV that's 50% off one day only, not thinking there's something wrong with it. But we don't do that with the markets. When the market's on sale, we don't want anything to do with it because our emotions get in the way. And again, we want to educate people on that topic so you do make better choices going forward. Here's another slide here. How often is a correction? I've already touched on this. 75% of the time, the market's going to be up. 25% of the time, it's going to be down. And there is no crystal ball. People that say they can time the market, no, that's not accurate. But here's another slide that Gradient put together. This tells another big snapshot of history, that when the green area is all the years the market was up 10%, 20%, 30, 40, even 50%, beyond 60%. On the left side, you're seeing the number of years the market was down 10, minus 20. But you see, the point is there's a lot more green than there is red. And one thing, again, this is not a plugger. This is not a sales market thing. But one thing Gradient has done, and it's a proprietary offering they have, it's called a structured note or a buffered index. We're going to actually do a radio show on this probably in a few weeks. But again, the disclaimer is I'm not making investment recommendations here, folks. But one thing Gradient did a few years ago, they introduced structured notes where we're using the S&P, possibly the Dow Jones, and they're building in a buffer, if you would, that on that structured note, they're putting in could be a 20% buffer. The one they're offering now is 100% buffer, meaning if the market goes down and we're benchmarking the S&P or the Dow Jones, and you've got that buffer, that means your investment principle is intact. But on the give back of that, there's going to be a cap on the upside, if you would, of what potential earnings you could make over that same 12-month or 24-month period. So again, that layers into this strategy well, because I showed this slide to some of these folks, showing them that if we had a 20% buffer, and this is the history of the downside in the market, and we're protected 20% of the losses. You can see there's only a few years out of the last 70 years where we did have, a greater than 20% loss. So again, I'm sharing this thing, folks, because if you've not heard this before, talk to your advisors. This is when Gradient mentions the umbrella. This is what they're talking about. Put an umbrella on your strategy so you do have some protection in the event we do have an unexpected downturn. Let's see. That is the last slide I've got on that topic. Again, I know we kind of went through this rapidly, kind of like a buzzsaw, but I think for our limited time here today, I just wanted to touch on a few things, make people more aware, and certainly educate some people that they don't make any knee-jerk reactions on what the media might be sharing, because you're not maybe getting all the facts prior to making what can be an important decision in your financial plan.
Well, Steve, thanks for sharing all this. I think, just what you just said is so important is, don't be reactive and based out of fear, but talk to a professional that can really help you navigate it, right?
Absolutely. And, I guess we'll wrap up on that topic. Going back to the Social Security, the Social Security Fairness Act does go into effect next month. And the people, again, this is a white paper. I'll be happy if you go to the website, I'll be happy to give me your email. I'll send this to you. It says the people most commonly impacted: federal workers under the old system, which is CSRS, state and local government workers, teachers. We've already mentioned that. It says in many states, again, Ohio is one of the states out of the 9 that is going to be positively impacted by this new legislation. And people with overseas pensions also are being impacted by this. So once again, the GPO, government pension offset, WEP, windfall elimination provision, take advantage of this, folks, and see what benefits that you would receive from this, and how does that layer into what you would do as far as your strategy that could possibly change when you might want to take your benefits from either taking your income early or maybe deferring Social Security to a later date. So we want to encourage people to take advantage of that. Once again, we will offer at no cost, no obligation, with the relationship I have with the chamber. We will run that Social Security optimization report at no cost, no obligation, to help you understand when should you consider start taking your benefits. It's a very important decision.
And once again, folks, in the chat here, I put the links to Steve's website, also his Facebook page, so you can keep up with the different events and things going on at Pinnacle. And then Steve's phone number, also the templetalkradio.com link is in there for the radio show. Steve, thanks so much for all this information. And hey, I told you there was no bar set before we did our first
See,
Zoom
you did
business
awesome.
meeting.
See, you kicked it off just perfect.
Yeah.
Well, I tell you, Wendy and Chris, I appreciate both of you so much. This coming to this market over a year and a half ago has been such a blessing to be in Beavercreek. And boy, who would have thought 2 years ago? I know we had a goal. We wanted to be in this market because we do work with a lot of government employees right now, and we want to be more accessible to that audience. And boy, we're right here in the backyard of 30,000 employees. So coming to Beavercreek has been such a blessing. I can't even imagine. Wendy, you even said it best. My whole life is transformed into a much, much better scenario just by being here in Beavercreek. Because
we even found you a wife down here, man.
Yeah, that's why I use Kathleen as my example. Yeah, in fact, Wendy is responsible for Kathleen and I meeting, and ultimately, yeah, Kathleen and I got married last year. She is retiring in July. 25 years of service as a government employee with Greene County. So this definitely has an impact on her, this new rule. And but yeah, it's really been great. And again, I love being down here. I love you guys. It's been so much fun. And life is, Wendy, I love it. Your hold that one sign, the banner, better together. That could not be, that could kind of be more well said, that since I've got to know you two down here in Beavercreek. So once again, it's a blessing to be here. I have so much passion about this. I mean, I've been doing this for 30 years. I just want to make sure people are getting the right information, factual information that can really have a positive effect on their life. And we just have a lot of fun doing this.
Well, thanks so much. Well,
Thank you,
I think this has
Steve.
been a great kickoff, don't you, Wendy?
I think it's been fantastic. We're excited. And hey, we'll figure out the Facebook Live for the next ones, but we'll
Yeah,
get,
I've been over here working. I still got
have
to do some
you?
research. Yeah, but it's
But we'll get it.
something
We've
that,
got it screen recorded, Steve, so we'll get it up on the YouTube channel so anybody can access it, and then we'll send that link out on social media. So just encourage everybody to check it out. Reach out to Steve so you can get that free report. That's pretty amazing. I know I want Steve to do one for me because I want to know when I can retire.
Yes, yes, yes.
How much longer do I have to be here with Fred?
Oh gosh,
she moved into my office, man. Get her out of there.
that's so funny. I love being around you guys. It's just fun to see you guys at the interaction between the two of you daily. So I just enjoy that, and I hope you'll invite me back again one day to do another one of these in the future.
Well, this is great too, because once again, you coming in and teaching this and telling us all this, we know that things are going to be changing. Like you said, who knows, 3 months, 6 months, 12 months from now, what we'll be talking about. But, that's why we're doing these monthly calls, is that there's a lot of relevant, helpful information that so many of our members can bring to the table and share.
Yeah.
And, we really appreciate you being the brave first presenter. Hey, we've got an exciting one next month that Wendy's probably going to geek out on a lot because she's an AI junkie. And
oh wow, yeah.
But Colin Lyon, who's actually a financial planner,
great guy. Colin's a great guy.
He is, but he's actually going to talk to us about leveraging AI in your business, because Colin, he's actually working on his MBA through Texas Tech, I believe, or Texas A&M, one of the two, which I forget which one. One of those.
That's awesome.
But anyway, Colin is going to be with us. He's used AI a lot. He's continuing to learn about AI through his education as well as business. And he's going to come and talk about the different tools that are out there. He keeps getting Wendy really excited about different AI tools.
Well, I'm excited about that and the tools, and then we'll be rolling out. I'm not sure exactly when it'll be. Hopefully, later this year still, is that we're going to actually have a chamber benefit through a company called Magi.
Wow.
And that is going to be all AI tools, but instead of signing up for individual tools that you have to pay for and then kind of work to relate them, this will be an all-inclusive. So Magi is a startup company that is putting together a way to use AI, and it pulls from all like 30 different AI tools for you in one place with one price tag. And the price tag with AI, it's still super, super affordable. They're like between 20 and 30 bucks a month. So we're excited to be able to roll out some AI tools. And with your chamber membership, you'll get a discount off that monthly fee. So we're excited to be able to bring that forward.
Well, I tell you, I welcome that call with Colin. He's a great guy. I've enjoyed getting to know him over the last year or so, but that's going to be a great session because we all want to learn more about this. I mean, AI is here to stay. There's a lot of speculation about the good it can do and the bad it can do. That's true with anything, but I think overall AI is going to make our lives more productive, more efficient. And again, I think it's just a way just to deliver maybe some more valuable content. So I'm anxious for him to be on next month's session. So
put the link in the chat as well. It's
Yeah.
April 22nd, 9:30 a.m., just like this one is. And you just sign up to get the Zoom link to join us live like this. We're going to once again record it. We'll also hopefully figure out why Zoom and Facebook aren't talking together like they are today. But once again,
there's always something.
It's always something.
It is. Technology is great when it works,
Oh well,
hey, Chris, you should have asked Chat GPT what was going on. It probably
trust me, I've been over here using Perplexity, which is you're like, why can't I get this connected? So it's telling me certain things, but I'm not figuring it out yet. So anyway, folks, thanks for joining us today. Wendy, any final last words from you?
No, I just want to say thanks again to Steve from Pinnacle Investment, and thanks for everybody who joined us. We hope you got some valuable information. And if you need any assistance or need any further help or have questions on this topic, please reach out to us or Steve directly, and we'll get you some answers. So thanks for being here today. And please, when we send the link out, if you guys would share it on your social media as well, that just helps us amplify things even further for our members. So thank you, everybody. Thanks again. It was a pleasure.
All right. See you guys.
See ya.
Have a good day.
Bye.